Good afternoon, everyone. Have already expressed my gratitude for us showing up here today. For me, I always take weekends, especially Saturdays, as a rest day. So for us to come out here, give us your time, tells us a lot about our zeal to add to what we know already and our quest to improve on our business processes and structures and everything around it. Today, we're going to look at growing a successful business in Nigeria. The truth is that a session like this it has become very important because we understand the economic condition as we have it today in our country. The truth is that many businesses have packed up and definitely many are on their way to joining the queue. The spilling effects of the COVID pandemic and also the constant dwindling value of our naira, for me, has been at the forefront of the economic situation as we have it today in the country. With us today, we have a pretty young firebrand, as in when you hear firebrand, this is a unique spec of what they call a firebrand, right? Ada Ofomado. Okay, she's the head of research at Augusto and Co. Limited. Actually, Augusto and Co. is Nigeria's foremost research and ratings company. She's also very involved in consulting services at Augusto Consulting. Augusto Consulting is actually a subsidiary of Augusto and Co. Limited. Prior to this time, she has been a senior analyst covering banking and insurance. Before joining Augusto and Co., that was in 2014, I think I'm correct. She spent 7 years in the banking industry with Fidelity Bank, to be specific. That's with their corporate banking group and their treasury management department. So you will agree with me, when I said she's a firebrand. So we have that spec in the house today, and she's really going to educate us. At the end of the day, I believe that time spent here will be time well spent. All right. So that is exactly why I would need us to follow us on our social media handles, on our IG, Facebook, LinkedIn, YouTube. Please, somebody should help me type the handle ID on the comment section. So I want everybody here to see it. So help me do it at intervals so that as people are joining, I want them to see our handles. So the need for that is so that we'll keep you updated, with a series of events. Actually, we had the last one on the 11th of September. That was last month, and it's actually going to be a series. We'll have some, coming up. Definitely, even before this month runs out, we expect to have another section. Before I leave the stage for Ada, I would like to give a shout out to the company behind this series of webinars, Parkway Projects Limited. Parkway Project is a financial technology company established in 2004. Parkway is licensed by the Central Bank of Nigeria to provide payment solution services. That's what they call PSSP. And in addition to the license to operate as a PSSP, Parkway is also licensed by CBN as a mobile money operator. Over the years, Parkway has built many applications for banks, and Parkway is also partnering with banks in a bid to get viable business applications to end users. Parkway actually is not alone in this push. Bank 3D, Bank 3 in digit and a D, that's one word, is also very much in this collaboration. Bank 3D is not a company. No one would ask, okay, what's Bank 3D? So Bank 3D is actually, in fact, is established. It's not as if I'm saying it. Bank 3D is the #1 payment solution in Nigeria that has helped businesses and is still helping businesses receive payments from their customers with great ease. So with Bank 3D, you would understand the value that sales staff, they do not need to keep customers waiting, especially if the channel of payment from customers is from bank transfers or USSD. Why? Because they get instant notification in-app notifications on their own profile. So they don't need to keep anybody waiting. They don't need to call the owners of the business or their line managers. That's some level of efficiency that Bank really offers when it comes to the space of payments. And of course, if you have a business and money doesn't come in by way of sales or any other means, I don't know what the business is doing. Probably Ada would teach us more about that. So at this point, I would allow Ada to take over. So if we have questions or comments as the section rolls by, I implore us to just put it down on the comment section. They'll be taken care of at the end of the delivery. So let me allow my wonderful guests to share a screen. And I think you can share a screen.
Yes, I'll try and do that in a few seconds. Good day, everyone. And I'm delighted to be here. Thank you very much, Ike, for the introduction. It's a pleasure to be here today. I'm looking at the participants list, and I can see a number of names there. I'm excited to see all of us. Thank you so much for taking out time to listen into this webinar. I'm hoping that there will be some value in the meeting today, and something that at the end of the day would say it was worth our while, right? Okay, so I'm also going to use this opportunity to thank Parkway Projects, the innovators of the bank 3D payment app. Thank you for the opportunity to speak here today. I know we've started this series of webinars. I think it was last month we started. We had Fiona come to speak to us about running a profitable business, and I thought that was an excellent presentation. And we're going to continue really in that light. But today, so first of all, before I go ahead, I need to be sure that I'm audible or I can be heard. So can you hear me?
Yeah, you are very audible.
Okay, that's fine. And you can see my screen as well, right?
Very well, yeah.
Okay, fantastic. So I can go ahead. So I was saying that last month, Fiona spoke to us about running a successful business, profitable business, really. And today I would want to, come from a slightly different perspective, even though I'll be saying, we'll pretty much be saying a number of things she also said at the last presentation. And so we're looking today really at growing a successful business in Nigeria. And the title of this presentation is very intentional and deliberate. So we're looking at Nigeria. We're looking at the context of Nigeria. And that's really where I would like to, to speak a lot about. So we see that there are a lot of conversations around running a successful business, a lot of conversations that have to do largely with the business, and which is fantastic, which is good, but most times business owners and even business financiers, so people who give out loans to banks, for instance, in the course of my career, I've been involved in rating financial institutions, rating banks, rating insurance companies, and even corporates, and especially for the banks that have to, that lend to businesses. We see that most times there's a lot of conversation and a lot of focus on the business, but there's we tend to ignore the environment that the business operates in. And I think that is really a recipe for failure, because businesses don't operate in isolation. There's an environment, there's a macroeconomic environment, and then there's also the industry as an environment as well. And these two aspects have to be understood, in depth to be able to run a successful business. So today I'm going to be talking about understanding the Nigerian business environment. Then I'll speak a bit about industry dynamics. How do you look at an industry and conclude, for instance, that an industry is profitable or it's attractive to a business person? And then after that, I'll talk about your business, okay? how do you mind your business? How do you run a business such a way that it's successful and it's profitable? And then I'll introduce Augusto and Co to you. So I'm a staff of Augusto and Co. I've been in the company for almost a decade, about seven years now. And so I'll talk to you a bit about what we do at the end of the presentation. Right. So before I start, I'd like to ask a question. And the question I would like if we can answer it in the chat room. Okay, so we're talking about running a successful business. I'd like to know, for instance, for those of us participating, that what's your definition? What does success mean to you, for instance, as a business owner or as a worker in a business, for instance? So what does success mean to you? What's your definition of success? So I'll go to the chat room and I'll try to see what our responses are, but please feel free to just put in 1 word, 2 words, a short sentence on what your definition of success is as a business owner. It will be interesting to see the comments that come in. Okay, so I can see Fiona is in the room. Hi Fiona, welcome. Good to have you here. So what does success mean to you as a business owner? That's the question. Okay. Okay, so what does success mean? I can see, okay, means my company is getting enough money, making more money than it expends. Fantastic. So it means that we're making profits. Okay. Victor says success to me is profit and growth. Fantastic. I like growth. Okay. Do we have any more people who want to just drop 1 or 2 words to talk, that defines what success is, for you? If you're a business owner, at what point would you sit down, and say, look, I'm successful. I think I'm successful at this point. Okay. Market share. Fantastic, Toba. So I'm assuming you're growing your market share, you're increasing your market share, you're holding a significant portion of the market, and that is really important. I mean, it's a good thing to look out for, market share. David says success is setting a goal and meeting that goal within a time frame. Fantastic. Goal setting and implementation. All right. Success also means profitability sustained over time. Yes. Profits, good brand recognition. Fantastic. I can see that I have business people in the house because we're all using those terminologies, right? Brand is important. And if you have a good brand, it's amazing how much extra people can pay for services when they know that, your brand is good. So they're just paying for the brand name, okay? Yeah, so good brand, fantastic. If my business is expanding, so then again, growth. Yeah, Fiona, that's growth. Growth is good. And growth really, when we look at growth, especially when we're talking macroeconomics a bit today, so when we look at growth, we're looking at real growth. So I'm not saying we're not looking at growth because you increase the prices of your goods or because you increase the prices of your service. How much more customers have you made? How much more products are you throwing into the market? That's real growth, so yeah, that's another indication. Mary Jane says success is in business means running a profitable business. Fantastic. Profits, exponential growth. Fantastic. Okay, so yes, so I'm happy with the responses I have seen. I'm happy. I thought that I would see making more money. Okay, I thought that was something I would see very often, but somehow we've coined it in a nice business-like way, profits, and all that, which is fantastic. Okay, so really, that's what business is about. When you run a business, what you really want to do is grow. All right, and in your growth, what you're trying to do is capture more market share. What you're trying to do is give more returns to the people who have given you money. That's the shareholders of the business. You also want to make money for yourself, who is running the business or who is the promoter of the business, right? So all those things are pretty much important. So like I said today, we're going to be talking about the business, right? But then I'm going to go an extra mile to talk about macroeconomics, and industry analysis. And so this webinar is really not to make you economics or economists at the end of the day, because that would be a very tall order. I mean, people spend years in the university studying economics, right? So it's not really to make you an economist. And really, you don't have to be an economist, to be able to run a business. You would find out. You just need to understand certain basic things that affect your business. And that's what I'm going to try and, do today. Be as simple and plain as possible, but bring out those real issues that affect businesses, especially in Nigeria. So when I'm looking at the macroeconomic environment, what am I really trying to understand? What is happening in the world, okay? What's happening in the country? And in a country like Nigeria, the happenings in the world are very important because of our relationship or the activities we have with the rest of the world, okay? So the global environment is important for us because we have a lot of activities with the rest of the world. If you recall that we're an import-dependent country, okay, even our exports, are concentrated in some sort. So we'll be breaking all that down in detail, but what's happening around in the world affects our business, what's happening in Nigeria, what's our outlook for the country, what sort of business can we even do in a climate like Nigeria? All right, those are the questions you're trying to ask. And then what sort of risks exist in this market? And then when you formed an opinion about the country and how the global environment affects Nigeria, in this case, then we now go down to the industry. And we're saying, in analyzing an industry, what we're trying to say is how attractive or how profitable is this industry? And in coming up in deciding or in concluding if an industry is profitable or not, there's so many things you want to consider, which we'll look at. You want to look at the regulatory environment. You want to know who the players in the industry are. Is it a closed industry where there are just a few players who control a significant portion of that market, and for some reason they have control of that industry such that if there's someone who wants to come into the market, they can tweak their operations in such a way that, you can be pushed out of the market, and you just find out that things are not going. So you need to understand the dynamics of the industry. Is it a volume-driven industry? Are the margins very small? All those things are things that that will come up when you're trying to understand industry peculiarities. And then when you form an opinion about the industry, then you can now talk about your business. So it's an understanding of the macroeconomic environment and the industry that helps you form a strategy as a business, right? So when you're starting off a business, you're not just sitting down to say, who are the people I need? What business do I need to do? No, that's not where the conversation starts. The conversation starts with what sort of business can even move in this country? And that's where we really talk about value. So when you run a business, the first thing that should be on your mind is value. What value am I adding? Because as long as you add value to your customers, you would see that, you really don't have to struggle so much to get the money in, because people just recognize that value and they're willing to pay, right? So that's how we're going to roll today. And I would want you to please move along with me, right? And like Ike said, let's know if you have questions. I'm happy. I would want to take this presentation in about an hour, and then I'm happy to take questions at the end. So let's talk about the Nigerian environment, right? So in every economy, inclusive of Nigeria, there are three key prices that drive the economy. So as a business owner, I'm saying that there are three prices that you should always keep tabs on and ask yourself, what is happening to this inflation? What is happening to interest rates? What is happening to exchange rates? And the information you're trying to gather is not just for you to sit down and, do some analysis, but for you to apply it to the business. So you're saying, how does inflation affect my business? How does interest rates movement affect my business? How does exchange rates movement affect my business? Right? So those are the three key prices you would see typically, that are relevant in every economy. But in Nigeria, there's a fourth price that we like to talk about, and that price is the price of crude oil. Okay, so Nigeria is a very unique economy. When we think about the fact that a significant portion of our earnings comes from the sale of crude oil. So I'll give you the numbers. When we talk about the government's foreign currency earnings, about 80%, a little above 80% of those earnings are from crude oil sales, right? And then when you talk about general earnings, so not just foreign currency now, local, general earnings, if you combine the local currency and the foreign currency earnings, that figure is about 60%. So 60% of our total earnings as a country comes from crude oil. So you see that as a country, where our survival or the means by which we earn money is concentrated in a product. So that's bad enough. Concentration risk is bad for any business. Okay, so if you're running a business and one customer accounts for 80% of your sales, right? I would assume that you're a small business and you're starting, right? So the idea is that figure is expected to drop, over time as you grow your customer base. Because when there's concentration in your customer base, it means that if anything happens to that one client, your business in one day is just thrown into chaos. So you want to reduce concentration risk in your business. So it's not a good thing that in Nigeria, a significant portion of our earnings is from one commodity. But what makes it even worse is the fact that that commodity that is giving us all the earnings, or almost all the earnings that we have, is a commodity that we have no control over. It's an internationally traded commodity. All right. Sorry, hold on a second, please. Sorry, my sincere apologies. Okay, so I was talking about crude oil, and I was saying that, so not only is a significant portion of our earnings from one commodity, that commodity, we don't even have any control over that commodity. So what it means is that the giants in the oil and gas market, talking about Saudi Arabia, talking about Russia, even the United States, that's coming up, those are the movers and shakers in the market. So in the grand scheme of things, Nigeria is a small fly, right? But we have no control over this market, yet the whole economy depends on the happenings in that market. So really, that's where the problem, of the country is. And that's why, there's a lot of talk around diversification, that's why people are going into agriculture. The government is supporting agriculture. What we're trying to do is reduce that concentration, and then have a hold on things that we can control. Okay, so if we're doing agriculture, if agriculture is like our main earning source, then we can play around the market. We can play with demand and supply, and get things, in our favor, compared to if we're just relying on crude oil, which is largely out of our control, right? So crude oil is important for the economy, and it's amazing how the happenings in the international markets, when you're talking about the oil and gas market, have a way of affecting Nigeria. So look back at 2016, 2017, when we had a recession. Okay, that was a period that I really monitored the market, and it was a period that it dawned on me how this oil problem is a real problem. Okay, it's a real problem for the country. So oil prices tank, oil prices come down, and then immediately we have issues with our foreign reserves, or what if you want to call external reserves. And when our external reserves come down, exchange rates go against us. Exchange rates go against us because we're a country that imports almost everything. So our import bill is a survival thing. So you know what I mean is that people don't import stuff because it's luxury. So you don't have people importing some exotic cars because they want to show off, that. That's not the case in Nigeria. People import stuff because they need to survive, they need to eat, they need to feed their children. The things that help us live, we need to import them. The food that we eat are imported, So it's very difficult for that import bill to go down. So when oil prices, go down, our exchange rates are messed up, inflation is affected immediately. Inflation just spikes because everything becomes expensive because most of the stuff we use are imported. And then, of course, when inflation rises, investors want to make returns that are higher than inflation. We'll talk about that very soon. If inflation is at 12% and you have a fixed deposit or any sort of investment that is giving you less than 12% returns, then you are really destroying the value of your money. Okay, what it means is that we'll talk about inflation very soon, but investors generally tend to look for interest rates on their investments that are higher than inflation so that they get a positive real return. So when inflation rates spike, interest rates have to adjust. And if you remember in 2016, 2017, if you were someone who used to buy treasury bills, for instance, I was an active, or I'm still an active person in the treasury bills market. I like to play safe, right? So if you're someone who is active in treasury bills market, in 2016, you notice that yields went as high as 21%, on government securities. And really what the government was trying to do then was to tell investors that don't worry, you will get real returns. We know that inflation is high and we're trying to give returns that are higher than inflation. Okay, so that investors will be attracted to the market. So you can see how a downturn in oil prices affects exchange rates, affect inflation rates, affect interest rates, affects everything. The banks are affected. They pull back on giving out loans. It affects the economy in every way. And then you begin to see reactionary responses from the regulators. So you see the CBN trying to patch, trying to just manage the situation. Okay, so that's how powerful that problem is. And then people always ask that, so what's the way out as a country? What's the way out? Personally, I'm someone who doesn't I'm not one of those people who would crucify the CBN. I mean, I'm not saying that the CBN is doing a fantastic job, but I tend to understand. I try to understand the reasons why they do what they do in terms of policies and all that. They're asking why is CBN banning BDC guys from selling FX? Why is the CBN saying if you bring your dollars in, we'll pay you $5 per dollar, and all that. So people, the initial reaction of most people when I hear people talk is one of criticism or condemnation, like these guys don't know what they're doing, and it's very easy to to point the finger at someone else. I remember I was at an interview, I was talking with someone recently, and the person just threw a question at me and said, Ada, if you were CBN governor right now, what would you do to salvage the situation of the country? And really, I opened my mouth because I thought, this is an easy question now. CBN is not doing well. There are many things we can do right. But at the end of the day, I could just, it was a difficult conversation. It was a difficult conversation. And what that said to me was that really, whatever policies, the CBN is taking, for instance, are just policies to manage the situation. The challenges of the country are long-term. There are challenges that have to be solved in the long term. So challenges around, let's begin to produce what we eat. Let's begin to produce what we use as a country, right? So and that's not such a difficult thing. I mean, I can start a business where I'm producing, I run a poultry, for instance, and I'm doing agriculture, and that's easy. But the main challenge is, the main reason why people are not doing these things is because the environment is not conducive. So then you now then have the conversation around infrastructure. How do we ensure that there's power? How do we ensure that the roads are good? There's a good transportation network, electricity, and all those things that businesses need to thrive. And then you begin to understand that, look, it's a long-term problem. It needs a long-term solution. Okay, so if we're going to start improving our roads, or solving our power problem, then we need to start investing now. So these are problems that cannot be solved in a decade, right? They probably will be solved in 15, 20 years. And these are 15, 20 years of consistent investments, okay? So it's investments every single year, but the country is not doing those investments. So, so it's a long-term problem. The solution can only come from policies and from the government, and all that. So whatever CBN is doing is just, let's manage the situation until things get better on the fiscal side with the government and with policies, and all that. So that's the story of the country, right? So let's talk about inflation. So I'm going to move my slide. Yeah, inflation. When you hear of inflation, what comes to your mind, right? Inflation basically, in simple terms, measures the changes in prices of goods and services over a period, right? And if you want to find out the inflation rate for Nigeria, for instance, the figures are there. The Nigerian Bureau of Statistics releases the figures every year. Okay, so you can log in www.mbs.com, I think, or you can just Google National Bureau of Statistics and go to the website. There's a lot of information on Nigeria you'll see there, including inflation. So what does inflation tell me as a business owner? What it tells me is, if say the inflation rate as at, we're in September or in October, I think the last figures were released for August, and I think it was somewhere around 17%, right? So if inflation is 17%, what that says to me is that in the last 1 year, the Naira has lost its value by 17%, right? So for instance, if you look at my screen, you will see I'm showing the inflation rate for various countries, right? And if I ask the question that, of these countries that I've shown, based on their inflation rates, which of these countries has the strongest currency, right? You can easily point out to the Switzerland Swiss franc, right? So the Swiss franc is the strongest currency. Okay, maybe I'm not wrong. So the Japanese yen is looking like the strongest currency here because it's showing an inflation rate of 0.3, which is about the lowest. And then we have the Swiss franc as at 0.4. So of all of these countries, it gives you an idea. So the inflation rate gives you an idea of the strength of their currency. So you want to put your assets or save your money in a currency that preserves value, right? So that if I'm saving money, even if I'm saving money in a savings account, no interest accrued, and I'm saving it over 10 years, at the end of 10 years, maybe the currency would have lost value by 0.4%, which is immaterial to some extent. So you can almost conclude that the value of that currency is preserved, right? But if you're holding a currency like the Nigerian Naira, which has an inflation that has averaged like 12% over 15 years, it means that over 15 years, the currency has lost value by 12%. So it tells you that Nigeria has the weakest currency of all of these countries, right? So you begin to think, and really the whole idea, like I said, this webinar is not to make you an economist, it's to steer some thinking, right? Because the truth is that when you know stuff, then you can think around those stuff. But when you don't know stuff, you don't even have the capacity to think about it because you don't even know it, right? So the whole idea is to give out some knowledge so that you can begin to think as a business, oh, okay, so this is the case. So how does that influence my business? How does that impact my business, right? So inflation says to me the preservation or the value of a currency over time, right? So we can see here that Nigeria Nigerian currency is weak in that regard. And sadly, inflation is rising for many reasons, right? So I know in the last few months, it's beginning to drop. I think last 2 months or thereabout. But generally, we're in a high inflationary environment. And what are the reasons? So one of the major reasons is that we have a demand that exceeds supply, right? And we're business people. We know that when demand is higher than supply, then prices tend to go up, right? So demand is higher than supply, so prices will go up. And what is driving demand? The population is growing, right? So Nigeria they say we're 200 million plus, and they say that we're growing at a rate of 2.5% to 3% every year. Okay, so with a population that is adding 5 million people to its population every year, you can see the growth, right? And that drives demand. So more people are requesting for stuff, but that's not even a problem. If demand is high, it's a good thing, right? But the challenge is supply is not sufficient. So output is barely positive. And the output here, so when I say population grows at a rate of about 5 million people per year, but growth in output is barely positive. I'm talking about GDP growth, right? So GDP growth is the gross domestic product, growth. So that gives you an idea of an economy is doing. So when we're talking about expansion as a business, the GDP growth rate tells you if a country is expanding or is contracting, right? So last year, for instance, we were in a recession, right? A recession means that we had 2 consecutive quarters of contraction, right? So in 2 consecutive quarters of the year, we had negative GDP numbers, or we're contracting, so we got into a recession. So you can see that in a country where the population is growing faster than output is growing, then there's a problem, okay? Another reason why inflation is rising is, again, the foreign currency issue, the exchange rates, right? So if I'm someone who, my business is to import shoes, so I import shoes and I sell them. I import shoes from the US and then I sell. So the moment the cost of importing these shoes go up because the exchange rate has gone up, then automatically I move the additional cost to the prices of my shoes, and then the cost of shoes go up. I mean, cost of things have gone up in the market significantly, and that puts pressure on inflation, right? So if you think back, I mean, I'm thinking 3 years ago, if I went to the market with, say, 15K to buy stuff, right? I may need a car, to put in the stuff that I bought to come back home, and then when I come home, I need many people to offload, right? But if I go to the market with 15,000 now, I mean, my 10-year-old daughter can come and welcome me home. Oh, mommy, welcome. What did you buy? I should carry the nylon. And she's not complaining that it's heavy, So that shows you that shows a weakening currency, when what you bought, the things that you bought 3 years ago with X amount of money, if you use that same amount of money now, you'll be getting fewer stuff. That shows that the currency is losing value. And so you need to begin to think. If you're someone who saves, for instance, right? There are people who they like to delay, what they call them now? They delay enjoyment. I'm forgetting how they put it. So they like to save, and enjoy in future. Sorry, hold on a second. Sorry, I'm so sorry. So sorry. I'm so sorry. My kids are a bit handful today. Okay, so I'm saying that, so if you're someone who saves, for instance, which is a good thing, it's a good thing to save. And in an economy like Nigeria, you have to be a good saver, even as a business. Okay, you need to be a good saver. We're coming to that very soon. So if you're someone who saves, then you need to be able to ask yourself this question that, okay, this money that I'm saving, so maybe it's a targeted saving. I'm saving over 10 years because I want to send my child abroad, for instance, right? So the question you should be asking yourself is, in 10 years, when I get all these savings that I have, what value would this money be compared to now, right? So if you're saving, in a currency that is losing value, you'll find out that it doesn't account for so much, okay? So that should get you, thinking, and that's what inflation does for when a country has high inflation. And so there are two issues. There's high inflation is not a good thing, but for me personally, I think it's more about stability, right? So if I'm in a country where inflation rate is at 12%, but that 12% is somehow stable month on month, year on year. So maybe in January it's 12.1, February it's 12, March is 11.9, it goes back to 12, 12.1. So it's relatively stable. That's not such a bad thing, okay? Because what it means for me as a business is that I can plan my costs. I can predict my costs, right? So if I'm a manufacturer and I buy raw materials, I can say, okay, this will be the cost of my raw materials. If I'm going to expand my business, additional raw materials, I can predict the additional cost and I can do projections for the next 5 years, and I'm fine. But when you have inflation rates that are like a yo-yo, today is 9%, tomorrow is 13%, next tomorrow is 15, then it goes back to 10. That's what makes businesses shake. It's the shock, that businesses are concerned about. So with inflation, it's really about, is our inflation rates stable, right? And in Nigeria, but really, whenever we have those crude oil prices issues, our inflation just begins to, misbehave. And that's really where the challenge is. So the question now is, so let's bring it home. How does inflation affect your business? How should you be thinking? Okay, so I understand what inflation is now. How do I apply it to my business, right? Right. So inflation, number one, when inflation rises, when it's unstable, it lowers purchasing powers of your customers. So remember when I said I go to the market, I buy 3 years ago what I could buy with 15K compared to now what I can buy with 15K, right? It clearly shows to me that my purchasing power has reduced, right? So when consumers' purchasing power reduces, purchasing power means the ability to buy stuff, right? When it reduces automatically, and it's human, you begin to ration stuff, right? You begin to ration stuff. I just thought now, so why are we blaming CBN for rationing FX? It's natural. When you don't have enough of something, you begin to allocate. Oh, you don't take this one, you take this one, you wait till next month. You let's wait till, you just begin to ration spending. And that's how consumer purchasing patterns are changing. Okay, so as a business, you need to ask yourself, with these goods I'm selling, how are my customers' purchasing patterns changing now that the monies that they have are not as much in terms of value as they had a year ago? Okay, so it's about listening to your customers. Okay, listening to your customers. What are they saying? What are they complaining about? How can you solve the problem? So it was in the news a few weeks or months ago when we heard that in some markets where, if you go to a market and you want to buy a tuber of yam, you just pick up the tuber of yam, But at some point, I heard that people started slicing the yams to sell, right? And people looked at it in different ways. Some people saw it as listening to customers, which is a good thing, right? Reacting to changing market realities, and being creative, in your business, which is really the way you should look at it, But I looked at it in a different light. I was like, man, this is the height of poverty. Like, seriously, how can you be selling slices of yams? But it's the reality of the market. So you may not see that trend in a market in a certain region of Lagos, right? So depending on the market that you're servicing, depending on your customers. If you're servicing customers that have the purchasing power, you may not have to sell slices of yam. But if you're serving the customers that, have low purchasing power, cannot afford to buy the tubers of yam, right? Instead of you killing yourself over how do I get rid of this, just slice them up and sell them in bits, but then you have to do the maths to make sure that your profit is still intact, that you're not just doing charity. So we need to listen more to our customers. What are they saying? And from hearing what they're saying, then you can begin to strategize as a business, right? So what can I do differently? How can I help? How can I offer value, right? And then there's also discussions around, with the lower purchasing power of customers, how can you get a bigger share of the customer's wallet, right? So the fact that customers are not buying certain things doesn't mean that they're not buying other things, okay? So I may stop buying something, right? But I may start buying something else. And these two products that I'm talking about could be in the same industry. So it could be in the same value chain. And I'm trying to think of a practical example, but what I'm trying to say is that how do you get a share of your customers? How do you get a bigger share of your customers' wallet? So an example that comes to my mind, and I'm sorry, it may not be a typical example, would be, for instance, I have a GT Bank account, right? And it's my personal salary account. And then I open an SKS account for my children, Smart Kids Save, so the children's account, right? And on the form, when I fill the form, towards the end of the form, there's a part that says, do you want to do a standing instruction, to credit your child's account every month? I know when you see the form, I mean, it's just very natural for you to say yes as a parent. Oh, that's true. I may want to save money for I want to save money for my child. So I'm opening an account for my child, and then I'm saving money for my child as well, right? So you can see how the bank has gotten a bigger share of my wallet, right? So not only are they enjoying my salary account, for instance, but then they also get to, so I tend to keep more money with them because I have my children's accounts with them. And of course, children don't use the money. So the money is just there, right? So if I didn't have that SKS account, I probably would just have my salary account, spend all my salary, or maybe move them to Treasury bills or something, and then the bank loses out. But with those children's accounts, they've captured a larger share of my market, right? So I said here, forward and backward integration. Really, what does that mean? So if you're a fruit seller, for instance, you sell fruits, right? People are not buying fruits as much anymore. Okay, fine. You can say you want to start doing smoothies. So there's a different market for smoothies, right? So if you take the fruits and then blend them, put them in a nice package, put some effigy around them, and then sell as smoothies, you then capture a larger market, because maybe the people who used to buy fruits from you were like the people on the road. You know how people just want to eat fruits, want to munch on something, and they just buy the fruits and munch on them. But by the time you start talking smoothies, then you get my attention, for instance, because I'm a fit farm sort of person. When I'm watching my weight, or when I'm doing like a dieting or something, I want to do smoothies. So that is forward integration, because you've moved forward in the value chain. So not only are you selling fruits, you've moved a step further. You've added more value to that fruit to make a smoothie. So that's forward integration. So backward integration would mean me planting the fruits, for instance. So recently I just developed a love for sweet corn. So I go to a supermarket and I see this packaged corn. I say, oh, why is it nicely packed? They say it's sweet corn. And then I bring it to my house and I make it. And wow, it's really nice. And then I now start asking myself, okay, so I go to the store sometimes and I don't see the corn. So I don't know, maybe it's a seasonal thing or something like that. So I then ask myself, can I start planting corn, sweet corn, right? So that's something a friend of mine did. She got sweet corn, the seeds from someone who sells, and then just tried it at the back of her house. She has a excess land, she has some soil there, and she just put the seed there, let me just see if it grows. And stuff is growing, right? So that's backward integration. So as against selling the fruit or the vegetable in this case, right, I've moved back into farming, if you want to put it that way. So it's part of expanding your share of your share of the customer's wallet. And then you also want to ask if your products and services are properly priced, right? And I see this a lot with businesses where people, so there are two ways you can look at it. There are people who offer value, they have a value in their product, but somehow they're afraid to price it because they feel that the market will not buy. So they're putting in so much in terms of cost, and then they're selling, they're not selling at the right price. And then you see people who are not putting in as much value, but they're overpriced. So you want to check your products vis-a-vis the value, and ask yourself, if I'm adding a lot of value to this customer or to this product, then I should be compensated in terms of my pricing. And don't be afraid to price, right? If you're adding value, people will pay, for the value that you're offering. But then you have to identify what the value is so that you can sell it. So someone is asking, oh, why is your own smoothie 2005 when I can get it for 1,000 down the road? Then you say, oh, it's 2005 because I'm doing this, I'm doing this, I'm doing this, I'm doing that. So that's you selling the value, and then the customer can then appreciate it. So inflation also increases operating costs. And the sad thing is that, in a market like Nigeria, it's very difficult to transfer additional cost to customers because we're a very price sensitive market. Okay, so majority of us Nigerians are poor, right? We're poor. The people who are considered to be the upper class, middle class, there are very few of us, right? So because of the price sensitivity, it's not, you can't just, oh, my raw material cost have increased, so immediately I increase my price. You have to manage that process, right? And that's why you see things, it's an interesting market. You hear, jokes about people saying things like about sardine, for instance, Titus fish, sardine, how the number of fish in the pack has reduced from 6 pieces to 5 pieces to 4 pieces to 3 pieces, and stuff like that. So that's just the manufacturer managing additional costs. So the manufacturer understands that, look, if I want to keep the number of fish at 6, I would have to increase the price. If I increase the price, these people will not buy, right? However, if I reduce the number of pieces to 3 pieces, and I keep my price, Nigerians will buy as long as that price doesn't move. So we'll open the sardine, we'll complain, we'll yap them, but we'll still eat it, right? We'll still buy and we'll still eat it. So it's the price sensitivity. There's not so much, depending on the market you're servicing, there's not so much demand for value like there is for pricing. So there's no sensitivity for value. You have very few people who would say, I will pay extra as long as the value is good. Most of Nigerians will say, don't worry, as long as the fish is there, that price, let it be the way it is. If it's 3 pieces, we'll manage it. So that's how you manage, operating costs as a business. So you have to think, what are the alternative sources that I can get for my cost line? So your cost lines being your raw materials, for instance. Can you source your raw materials from an alternative, cheaper source without compromising value? From a closer source, for instance. So you can cut off the challenge of transportation and the implication of cost. You also want to think about outsourcing. So if there's a particular function you carry out in your office, you've done the numbers, this is how much it costs me to carry out this function, right? Okay, do I have an outsourcing alternative? Now compare the outsourcing alternative to doing it in-house and look at the numbers. So the numbers are important, right? And then look at the numbers and say, okay, so maybe outsourcing is a cheaper alternative, assuming that value and quality remains the same. And then you want to review your major suppliers as well. So another thing that inflation does is to erode the value of investments. And I think I've spoken about that. So you want to check your investment portfolio as a business. What am I investing in? All the money that I make, when I make excess money, I put it in some investment. What yields am I getting? from that investment versus inflation. And this slide just speaks to what I'm trying to say when I talk about real returns, real positive returns. So this is the Nigerian story. I talked about 2016 when we had the recession, and the yields on. So typically, when we use interest rates, we try to benchmark against the 1-year yields on government securities, right? Because government securities, that's treasury bills, the Naira treasury bills, right, are considered to be the safest investment outlets, right? Because it's considered to be risk-free, because it's the government security, and because it is a domestic currency. So why are treasury bills considered to be risk-free? And I'm saying treasury bills, Naira treasury bills, why are they risk-free? They're risk-free because the government has the power to print money, right? So the government will always be able to pay back on its treasury bills investment. So it's borrowed money from the market. People are giving money to buy treasury bills. Government has used the money. No matter how bad things get for the government, they can always pay back, because worst case scenario, they will just print Naira and pay you back, right? So that has implications on inflation and all that. That's not what I'm trying to explain here. What I'm trying to say is that, look, as long as it's Naira and it's federal government, you can always get paid back. So that's why it's called risk-free. So in looking at interest rates, we tend to benchmark interest rates to 1-year government securities that are Naira denominated. And in 2016, we'll see that it was about 18%. So average 1-year treasury bills would give you a yield of 18%. And then we had inflation around 9% in 2016. So the real return was positive. That's 18% minus 9%. You're getting 9% return. So when you buy treasury bills at 19% and you get your returns, it means that 18% has taken care of inflation, right? So the value, you losing money, the value of your money reducing during that period has been taken care of. And then you have an extra 9% return. That's the real return on that investment. And then in 2017, yields went up to 21%. Inflation went up as well, 16%. But then people were still getting real positive returns. But let's look at 2020. What happened in 2020? Yields dropped significantly. So treasury bills rates dropped. And that was completely artificial and is temporary. So we can see yields have started coming back up. So it was artificial. It was just the government trying to help businesses manage in a COVID environment, right? So let's make everything cheap. If you want to get credit, it's cheaper to get credit, so you can go to the bank, get cheaper money, use it to expand your business. Generally, just allow the economy spend its way out of the recession, right? So that's why yields on treasury bills, if you go to a bank to take a loan, it was cheaper, right? So we had like 3% for government securities, but inflation was high, 11%. So you see that returns was negative, right? So we had negative returns. So if you were buying treasury bills at 3%, you were destroying the value of your money. It wasn't a good investment, if you permit me to say that, because if they give you 3% return on that investment, inflation has already wiped out that 3%. So you're still in the negative of 8%. Right? And you see that investors, that's why a lot of investors that had come from abroad were exiting the market. So that's the kind of investors we call them foreign portfolio investors, right? These are people, they're also called hot money. So these are people that just sit down in developed markets where their interest rate is very low, and they're looking for regions where they can find high interest rates, where they can invest and get high returns. And those high returns are usually gotten from emerging markets like Nigeria. So they sit down, they look at Nigeria. Oh, Nigeria is doing very well. They're doing 21% on their treasury bills. So yeah, let's go and invest our money there, right? And in making that decision, they also want to know, because they know that when they send in, if it's a US company, for instance, sends in his dollars to Nigeria, you have to convert that dollar to naira and then invest that naira in treasury bills. So they also want to ask themselves the question and say, look, that naira I'm investing, what's the inflation rate? What is the yield I'm getting on that investment? Right? So they will only invest when the yield is higher than inflation. But the moment you have a 2020 situation here where yield is lower than inflation, those guys, they don't waste time. They just exit the market. They are not tied to the Nigerian environment. They're just looking for a way to make money. When they cannot make money anymore, they begin to leave the market, right? And when they leave the market with their dollars, right? And that's what puts pressure on our reserves again, because the portfolio investors are asking for their dollars. The CBN has to give them their dollars so that they can exit the market, right? So the whole idea here is that, look, for any sort of investment, the your yield on that investment always has to be higher than inflation, and you should think of that as a business person, right? And so that's why there's a lot of shift to foreign currency assets, right? So this slide shows you, for instance, so in looking at the returns you get on if you invest in a foreign currency asset, we'll say, okay, Nigeria, if Nigeria was supposed to raise a 10-year US bond, for instance, it will cost about, in 2020, it cost about 9%, right? For US, if you go to the US and you want to buy their 10-year bond, it will be about 1%, or it was about 1% in 2020. So that means that for investing in Nigeria, investors are pricing the risk of Nigeria at about 8%, right? So you see why foreign currency investments in Nigeria tend to be higher. So if you buy Nigeria's Euro bond, for instance, okay, so Euro bond is like a foreign currency instrument. So if you buy Nigeria's Euro bond, if you take dollars and you say you want to buy Nigeria's Euro bond, you get a yield of 9%, right? And then not only do you get a good yield, you also get your currency preserved. So the value of the currency is preserved because it's in the US dollars, and the US dollars inflation rate is less than 2%, right? So that's why there's a lot of talk around moving your assets to foreign currency denominated instruments so that you can preserve value. So the question is, how are you responding to the upsides of this foreign currency investments, right? And then I also want to ask that if you have a business, if you run a business that has, I'm so sorry, if you run a business, I think I moved a bit. If you run a business that has the potential to export, then you also want to consider that, very much if you can export stuff, because that what that would mean for you is that you can grow your foreign currency earnings, and of course you can leave them in a currency that can preserve value. All right. So what's the implication of interest rates, movement in interest rates on your business? It affects your cost of borrowing, right? Because last year interest rates were a bit low, but now they're going back up because Nigeria is not a low interest rate environment. We can't be. If inflation is double digits, interest rates cannot be anything less than double digits. Okay, so so access to credit, right? How easily can you access credit as a business, considering the cost of borrowing? So if you go to a bank, you want to lend money to expand your business, you're talking 21%, 22%, 25% interest rates, right? You need to punch in the numbers and ask yourself, the interest I'm going to pay on that loan, am I making enough money? And making enough money is not your revenue, it's not from your sales, it's from your profits. So when you make your revenue and you check out all the expenses, what is left? Compare it to the interest you have to pay on that loan. If what you have left as a business that you call profit is less than what you're paying on your loan, then you have no business borrowing. You have no business borrowing. The amount you make as profit has to be significantly higher than your interest payments, because that's the only way it will make sense. for you to borrow. So if you have a business where you cannot borrow from the commercial banks because their interest rates are too high, then you have to look for cheaper alternatives of funding. Okay, and really there are institutions that give cheaper funding, so I know of them. I know Bank of Industry does cheaper funding. I know there's some other government-backed institutions that give funding to targeted businesses. Okay, so number one is the knowledge. Number two, so once you know about it, then you can begin to take action and begin to find out, what are the criteria to access these funds and all that. And that leads me to the next question. Are you a loanable business? Okay, so I've rated banks for years, for over 7 years. And in rating a bank, what that means is I look at the bank's activities, I look at their financials, I speak with their management, and then I give them a score for their business, right? I give you an A or a B or a C. There are different rating scores you can give businesses, right? And one of the major issues when we speak with management, one of the issues that they tell us, and it's even obvious, because when we rate banks, one of the things we ask them to do is to give us a list of the people they give money to, they loan money to, right? And you see, when you go to one bank to another bank, it's the same names they are giving money to. If it's not Dangote, it's MTN. If it's not MTN, it's one of those big names. So one thing they complain about is, look, the businesses that are loanable are very few. So what I mean by loanable is that, do you have what it takes to get a bank loan, right? Because the banks, they have their own concerns, right? So you say banks are not giving out money. The people who run banks, they're also business owners, right? They've put their monies into a business and they're waiting for return. So they want profit, they want expansion, they want all those things that we want, right? So they won't want to throw their monies into businesses that are not credible. Okay, so as a business person, you need to be able to think that, how do I make my business loanable or credible, right? Like, how can my business be attractive, not only to lenders, even to investors, right? So many times when we do consulting for businesses, especially the SMEs, there are issues, right? You see, number one, there are no numbers. They have no records. You just see it's, I'm sorry to say, but most businesses almost like a joke. Like people just go into businesses, without planning. So we're going to be talking about strategy very soon. Without planning, you see a lot of no respect for the business. You see a business owner, because you're the business owner, you're going out, maybe you want to take someone out for lunch, you just call the accounts person, give me 10,000 there. And the guy just counts 10,000 and just gives you no bookkeeping, no inputs, no how the debits, no credits, no records whatsoever. And that just happens. So a lot of businesses. So the issues that banks have with some businesses, number one, there's no record keeping. So you tell me you've been running a business for 2 decades, for 20 years, and I say, oh, that's fantastic. Can I have your accounts for the last 3 years? And then you bring out one ledger where you have expenses, revenue, and that's all you have. So what's the value of your business? You've been running this business for 20 years. What are your assets? What are your liabilities? What's your revenue per year? The numbers are not there. So how do banks assess your credibility? How can we tell that you're a good business? And the numbers are really important. Okay, so in the rating business, when we rate companies, I remember there was a company I rated, very recently, and it was when I saw the name of the company, in my mind, it was a well-known brand. So in my mind, I said, oh, this company is going to get a good rating. Is this company now? They are the ones there. See, they are building here. See, they are building there. So we asked for their accounts, right? And as soon as we got the accounts, of course, we start doing the credit analysis, trying to see punch ratios, see if they're profitability ratios, and all those other credit issues, credit terminologies. And then as I saw the numbers, I was like, this cannot be true. Numbers were poor, very, very poor. Like I couldn't reconcile the business name with the numbers. But the truth is that numbers don't lie. Okay, numbers don't lie. So a business can look very good from the outside, but until you see the numbers, you can't really say, And so as a business, you need to make yourself loanable. So you may say, oh, I'm not interested in any loan. I have money. I can run things by myself. Fine. But, you start a business today. Nobody knows tomorrow, right? You can start a business today that is 100,000 naira business. And, God shines on you. The favor of God shines on you, combined with your hard work and all that. And it becomes a 10 billion company in 10 years, right? And then investors are interested in your business. They want to be part of your success, right? So so they want to know your history. How did you achieve this? What's the trend? Where are your numbers? Where are your accounts? Okay, what's corporate governance? Who are the people managing the business? Do you have a board? Who's your executive manager? Who is the executive management? Who is the board? Do you have a structure? Those are the things they'll be looking out for. And if you don't have them, so those are the issues. Interest rates also dictate how well you can expand, because you need more money to expand. If you're going to borrow to expand, that's one thing. If you don't have what it takes to borrow, for expansion, then you have to expand from within. So there has to be an organic growth. Organic growth means that the profit that you make, you put it back in the business, okay, and then grow. You make more profits, put it back in the business, and then grow. And then this time, you begin to expand. And I think here that in an economy like Nigeria, buffer is very good. And what do I mean by buffer? As a business, when you make profits, what do you do with your profits? Okay, so we have some businesses that they make profits, everybody's excited, they're rejoicing, everybody can spend the money, the MD will go and buy a car and build a house, give bonuses to everybody, and then you start the next year on a zero level. No investments, no savings for the rainy day, and all those stuff. That's not a very good strategy, especially for a country like Nigeria. Why? Because Nigeria is a very volatile economy, right? COVID happened last year. COVID is still happening, and you will see that some businesses there are three types of businesses. There are some businesses that have crashed. They don't exist anymore. There are some businesses that are struggling and praying, God, help us, we're in trouble. There are businesses that is like nothing happened. It's like, okay, really, COVID, what happened to COVID? Okay, so maybe there's a fourth one. There are some businesses that are even doing better than they ever did, before COVID, okay? So let's leave the companies that are doing well. I'm talking about companies like those in the telecom space, right? So telecoms is doing well, and we all understand why. Everybody's doing remote working, blah, blah, blah. But I'm talking about businesses that COVID happened, nothing spectacular happened. So there was no extra revenue or extra demand like you had in the telecoms space, but they're just okay, right? You see that those companies that had that kind of story are companies that had a lot of savings put aside. So when COVID happened, they just took out of those savings and balanced themselves, and they're okay, business is running. If we need to expand, or if they needed to expand their IT infrastructure or whatever to accommodate online sales or online requests and all that, they just take money from their savings, put together, upgrade their IT framework, and they're fine. And business, continues as usual. So that's because they have a huge buffer. So as a business, you don't want to spend all your profits or all your money. You want to keep some money aside for the rainy day. so that when things like COVID or things like crude oil prices crashing happens, you're not shaking too much, right? So you also want to consider interest-free loans or liabilities. So if you have some agreement, if you've been in contract with some suppliers and you've shown good track record, you may want to ask for some, we call it spontaneous financing. You want to ask for credits. So, okay, I've been doing business with you for a number of years. I've never disappointed you, right? Right now, I'm in a situation. I need your support. So, can you give me things on credit? Can I pay after a while, right? So you can consider that for expansion. And then interest rates also affect your investment portfolio again, talking about real returns like we spoke about before. Okay. And then the last one is the exchange rates, right? So exchange rates is also important for businesses in Nigeria, like I said before, because a lot of what we do, we have a lot of interaction with the rest of the world. We import a lot of things, right? So our exchange rates are important to us. In the last few days, I'm sure we've been following the news. We've seen all the pressure on our exchange rates, how exchange rates keeps weakening, the currency is weakening, and all that. So what's causing this pressure? Or what are the factors that determine whether or not your exchange rate is stable as a country, right? So for Nigeria, the crude oil prices, like I said, is a major determinant, right? Once crude oil prices move, it is a no-brainer. We begin to have problems in the country. Another thing that stabilizes our exchange rates are what we call workers' remittances, right? So our brothers and sisters abroad, when they make money, they send it back to Nigeria for whatever reasons, maybe to build a house, maybe to start a business, whatever reasons. But we have that significant amount of money coming in as workers' remittances. And all those just help to strengthen our currency. Then when we borrow also, so Nigeria just issued a Euro bond. So Euro bond means Nigeria goes to the international market and tells everybody, will come and invest dollars in our economy. So all the dollars that they make from the Euro bond, they put it into the reserves and it strengthens the currency. And of course, other foreign investments, right? So the pressure on the country's external reserves, we think will remain. So the question is where we are now as a country in terms of the naira to the dollar. So I heard the other day was at 575 naira to a dollar. The pound is even worse. And all that. What's our expectation, right? What's even causing this? What's causing this pressure on the currency? Truth is that the CBN still has a lot of backlogs in terms of its foreign currency obligations, right? That is still trying to settle. I told you about those foreign portfolio guys that come to make money from the Nigerian market and then they exit. So those guys are still waiting to leave the market because our yields are not as attractive anymore. The country still has loan repayments. CBN intervenes in the market once in a while to stabilize the currency. So we're still going to have this struggle with our currency. And the fact that we don't manufacture stuff, we always import, just tells you that, look, this devaluation we're talking about is still going to happen. I mean, it's not a cost, it's just the reality. So what does this mean for you as a business? It means that if you're importing raw materials, the cost will go up. If you're selling finished goods, cost is going up. So do you want to begin to source locally for your raw materials? How do you manage inventory? Okay, inventory management, when you're stocking up, how do you ensure that you buy enough volume so you don't always have to make orders and struggle with the exchange rate and supply issues? Like I also said, exports. If you're a business that can scale up and begin to export, you want to concentrate on that sort of business. And then There are also issues around availability of foreign currency. So even when you have the money, you want to import something, the CBN is not giving you dollars because there's no dollar. So how do you manage that? Okay, what alternative sources of FX, can you explore as a business, right? So I'll just skip this and then I'll go to industry. So we've talked about macro, and I think I want to hear voices at this point because I think I've spoken a bit. So maybe one or two people can just tell me if they understand what I've said so far, talking about the macroeconomic environment. Okay, can people unmute and speak?
Actually, I did not set it for people to be able to talk. The setting is for,
okay.
it's for us to drop questions on the comments.
For chats.
Yes.
Okay. Okay. So do we want to take questions now or after the entire session?
So I was thinking we'll round off first, then we'll take questions.
Okay. All right. So someone says we're enjoying the session. Thank you very much. That's an encouragement. Okay. Because when I take sessions like this, I like participation, so that okay. So someone has. So I feel a bit comfortable now.
So sorry. So there's a question. I don't know if you would like to take it at this point, or we still keep the status quo as per after the sections. But I think I would like you to take this one before we proceed. Are you okay?
Yes, I think so too.
Okay.
Yes, I think so too, because it's talking about the macroeconomic environment. So maybe we can just trash that out before we move on.
Yeah.
Okay, so the question is, how do we bypass sustainability challenges such as inflation, interest rates, and exchange rate to add value in these times, both for SMEs and for big businesses? Yeah. Okay, so my understanding of the question is how do we overcome all these challenges, right, to add value to our businesses and to our customers? That's a very good question, and we're going to answer it when we talk about the business, right? So when we talk about strategy, I think that would answer the question very much, and then I'll come back to you to ask if my explanation answers the question. Okay, so let's talk about industry now. So we've tried to understand the macroeconomic environment, the things to look out for, the pointers to say, this is how the economy is doing and how it relates to my business. So the next level is understanding your industry. So whatever industry, whatever business you're running is within an industry, and you need to be able to identify that industry. When you identify the industry, you then ask yourself that, is this industry competitive? Is it profitable for me? Right? Because remember, it's all about the profits. There's no use doing business if you can't make money. I mean, we're not running a charity, it's not an NGO, right? We're here to make money. So how do you assess the industry risk? How do you assess profitability of an industry? There's a framework and a tool that is widely used in the market, and I think this is one of my favorite tools. It's called the Porter's 5 Forces, right? And I'm going to try as much as I can not to sound academic, but this tool is actually very practicable and very good, So there are many other tools you can use to determine if an industry is profitable or not, but I like this one. And at the end of the day, you would see that by the time you answer you answer questions around these 5 factors, you have an idea of if this industry that you're operating in is profitable or not, right? So the first is, and I'll just move to the next slide because I think that captures. Okay, so let me look at the 5 components first of all. There's one, the threat of new entrants. So you're asking yourself, this industry I'm operating, how easy is it for a new person to come into this market? That's the question you're asking. Number two, bargaining power of buyers. So the customers in my industry, how powerful are they? Are they customers that can force me to reduce my prices, right? Or they are customers that they can't determine, I'm the one who calls the shots, they can't determine what the prices are. The third one is the bargaining power of suppliers. So now we're looking at the suppliers. How powerful are the suppliers? Are there people that today they can just change their prices of what they're supplying to me as a business, and I have no choice than to just take it, right? Are they that powerful? Then another one is the intensity of rivalry. So that means that of all of us that are operating in this industry, do we like ourselves or do we hate ourselves? How is competition like? Is it fierce or is it moderate? Okay, so I'll give examples when we look at the next slide. And then the threat of a substitute product. So the product I'm selling, is there an active substitute such that if I move my own price, if I increase my price of my own product, right, people just switch to that substitute product immediately, right? So if my prices go up, people just move to the alternative that is cheaper, right? So if the threat of a substitute is very high, it means that you cannot be moving your prices anyhow. You have to be conscious of that substitute product. So really, you want to operate in a market where the buyer power is low to moderate. So that means you can be in control of your prices, right? And really, so if you're in an industry where buyer power is high, I'm not saying you should exit the industry or stop selling what you're selling. But like I said, it should just get you thinking, right? So you know how to respond to, for instance, when the cost of your raw materials go up. If you know that you can't just change the prices, then you have to look for another way. If you know that your buyer power is high, the power of your customers is high, then you won't even venture into increasing prices significantly. You look for another alternative, right? So you also want supplier power to be low to moderate as well, right? So you're saying, and this, when supplier power is low, it means that there when supplier power is low, it means that there are many suppliers. Okay, there are many suppliers, really. So you have choices. That's what it means. And then switching cost is also low. Then rivalry among existing competitors, you also want that to be low or moderate. Okay, because if you're in an industry where rivalry is high, what tends to happen, especially when the competition is around pricing, where the way the operators compete in that market is that they drop their prices. That's not good for the market, right? So a typical example that comes to mind is when telecom started in Nigeria, where we had MTN coming first, and then we had Glo coming later. And Glo came with that strategy of let's just reduce prices to the barest minimum. So that was good for the users of the services, but it wasn't good for the industry. Because what happened is that their margins just continued thinning out until, if you look at voice in terms of telecoms, if you look at the voice market, there's really not much profit there now. So they're now looking for other new places to make money from. Okay, so competition, when competition is too fierce in an industry, the overall impact is not good. Okay, and there are different ways you can react to it. So if you're operating in an industry like that, then you have to think about things like product differentiation. So how do I differentiate myself from the pack, right? So I'm not playing this pricing war game. I'm just going to create a product with value where I can capture a different market that these guys don't have, The threat of new entrants, you also want an industry where the threat of new entrants is low, meaning that the people in the market can enjoy the profit of that industry. However, if it's easy for people to get into your market, what it means is that you're operating in a market where margins are very thin, right? And if margins are very thin, then it becomes a business of volumes. So you have to look at your volume side. How do I grow volumes, right? Because so many people are coming to this market, they're crashing. You know, a lot of us are sharing the pie, right? So how do I increase my volume so I get a larger share of the market? And then threat of substitutes as well. Like I explained before, you want that threat to be low so that you can play around with your prices, you know, without losing market share. And if you have a high threat of substitute, then you need to be able to manage that, you know, and then your strategy has to evolve around that narrative. So this is like the final part now. So when you understood the macro dynamics, you understand your industry, now you can then mind your business, right? You can then look at your business and then you're saying, now, how do this macro, so you're looking at the macro indicators and you're looking at the industry factors, and then you're saying, based on my understanding of these two things, I can then now form a strategy for my business. Okay, so my question to you is, do you have a business strategy? Right, you have a business strategy, and it's very important. If I'm to consult for a business, that's one of the first things I ask, what's your strategy? You know, and if you tell me, oh, my strategy is to grow, is to expand and grow my market share, so that's a very good strategy. Is it documented? Do you have a document that breaks down that vision into different aspects, you know, that makes it more that makes it achievable? Okay, and so if you show me a document that has that breakdown, I say, okay, that's a good job. Now, how do you monitor? How do you monitor? Do you implement all these things you say you're going to do? Right? If you said you're going to do this last year, have you done it? If you did not do it, why did you do it? Okay, because COVID happened. Okay, so how did you respond to COVID? You know, so a strategy document is like is a living document, and I'm going to explain very briefly what strategy really means, right? And what your strategy document really should contain. But I also wanted to highlight that a strategy document is really a living document and it's fluid, especially for a market like Nigeria where things change per second. You can't form a strategy today and then put it on your shelf and say, oh, that's a strategy for the next 1 year. After 1 year, we'll revisit it. You probably would have to revisit it every month because macroeconomic factors are changing and because the industry environment is changing. So with every change, you have to go back to that document to say, what are we going to tweak, right? What are we going to include? What are we taking out? What are we doing differently? Right, so there's a very nice model of forming a strategy, you know, and this is it's in a book. I think the name of the book is Playing to Win. I think the name of the book is Playing to Win. I can get the author very soon, but the author just breaks down strategy into 5 key questions, right? The first question is, what is our winning aspiration as a company? Right. So the first question is, what's your purpose? What does winning mean for you as a company? When you answer this question, that is when you'll be able to come up with your vision as a business and your mission statement, your vision and your mission statement. Okay, so you clearly define what your purpose is, right? What does winning mean? Does it mean having 60 branches in Nigeria and then moving to Ghana after 2 years? It's a holistic and like a top level discussion that you have as a business owner, what your purpose is as a business. When you've established that, you now come down to ask yourself, where will I play? And that's very important. So when businesses start up and then you ask, who is your target market? Say everybody. Okay, so what are you making? Oh, I'm making smoothies. Who is your target market? Everybody is my target market. Everybody cannot be your target market. Okay, there's some products you would manufacture that can be an everybody market, but you need to be able to define who your market is. right? So you're not just chasing the wind. There's a specific group of people you're targeting. Where you play will also capture your geography. Do I want to operate in Lagos alone? Do I want to do Lagos, Abuja, and Port Harcourt? Do I want to go to Ogun State alone? Do I just want to stay in Abuja? Do I want to take the whole of Nigeria and then move to Ghana and Kenya? So what's your strategy in terms of geography? You have to define that as well. In terms of products, what product do I want to sell? What variants of the products, do I want to sell? What would be my channel for sales, right? Do I want to sell just online, or do I want to do retail? Do I want to establish kiosks? Do I want to do delivery bikes? What are my channels of reaching my customers, right? So that question would explain where to play. And then how do we want to play? How do we want to win? So that speaks to your value proposition. What value am I bringing to my customer? What makes me different from the other people that sell smoothies, for instance? What's my competitive edge? So my competitive edge could be that I have a farm at the back of my house. So that's where I get all my fruits to make my smoothie. So my competitive edge to my customer is that, look, this smoothie that you're drinking is fresh farm product. It hasn't traveled from north to west or east to south or whatever. It's fresh from my farm. It's healthy. If you're on a diet, if you're battling a health condition and you need fresh fruits, I'm the one that you can get it from. I'm the go-to person. That's a competitive strategy. That's a value proposition. Okay, so how do you want to win in that market, knowing that you're not the only one in the market? That's another question. Then based on, by the time you've defined what winning means to you, where you want to play, and how you want to play, then you can now begin to say what capabilities you need to be able to achieve your how to win, where to play, and your winning aspirations, right? So the capabilities are unique to your purpose. So you can't say, for instance, you can't take the capabilities of your competitor if you have a different strategy, if you have a different where to play or how you want to win. The capabilities have to be suited, have to match your purpose as a business. And you're looking at capabilities, you're looking at skills. Okay, your skills, so the talent, the people that you're working with or that run the business with you, what capabilities do they need to have? Okay, and then you also want to know management systems. What management systems are required? So that speaks to your systems, your structures, your processes, right? And it's amazing how this is where Bank 3D, for instance, will sit very nicely. Okay, as I was preparing this slide, it was a good thought, that we're talking about Bank 3D and we're talking about growing a successful business, right? Sometimes they look like they're not connected. But as I was writing the document, I said, look, this is oops. Sorry, can you hear me? I can see here that my internet connection is unstable. Can you hear me?
I can hear you very well.
Okay. Right. So as I said, what management systems are required? So Bank 3D just came into my mind, because what Bank 3D does for you is that it helps in your systems and your processes. And that is really part of the strategy, right? So the person who wrote the book about strategy probably wasn't thinking of a Bank 3D. Or you see how all these things just nicely fit into strategy as a business. So talking about systems, talking about people, very important. I mean, a business is only as strong as the people who run it. And I always tell people who run businesses, never underestimate the people that run your business. If the people that run your business are not happy, it will show in the business. If the people that run your business are happy, it will show. As in, it's just there's a direct relationship between the people and the success of the business. So people being happy, and this speaks to culture. People being happy, talks about, it's not only about the money, it's not about the remuneration only. It's about the skill, it's about the sense of growth. So if I'm working in your company and I've been there for 5 years and I don't feel like, I feel like I'm just wasting my life because the things that you tell me to do are just, I mean, there's no growth. I can't say 5 years ago I was doing this, now I'm doing something better, right? If I don't see that, I mean, there's no motivation to continue. So it's about the skill. How are you training your staff? Sometimes businesses look at trainings as a waste of money, right? But that's a very wrong perception because it's the same people that are going to run the business. If they're not skilled, if they're not trained, they won't. You just have people who don't know stuff running your business, and it will affect the business. Okay, so we live in a, so with COVID now, right? I mean, in my office sometimes I can sit down on my desk and I can attend 5 to 6 webinars in a day, and nobody knows. So I'm just sitting down on my desk and my earphones and my ears, and I'm listening to webinars, and it's amazing, because of COVID, a lot of companies are throwing out their content free of charge, because to them it's like a strategy. They're trying to gather the market. So they're telling people, we can do this. So that it's like a bait, that they're throwing into the market. So these webinars are free. I mean, Parkway Projects is doing a free webinar for you, and then someone from Augusto and Co is speaking. I mean, you may not have had this opportunity maybe 2 years ago. So there's a lot of information, and it's accessible, right? So training is no more as costly, except maybe you're looking for specific skills, that would cost because you need a professional, but you can just tell your staff, there's a training on doing a successful business. Just listen in, just sit down and listen, and then you're getting a lot of information. You're getting people trained. You're getting people to think like you, the business owner, and all that, and you're developing skills. So people are important. Systems are also important, right? Because the systems sort of like put people in check. Okay, so if you have disgruntled staff, if you have staff that are not happy and they've been in your company for a long time, they'll play around the systems because they know the systems, right? They know the systems. So you need to check your systems, is what I'm saying, right? And then in checking your systems, you also need to make sure that people are happy. Because when you build a system, most times it's not always 100% fireproof, right? If you have people who have been in the systems for years, they can find loopholes. And if these people are not happy, they will take advantage of the loopholes. And you just find out that maybe you're losing money, someone is stealing money, someone is cornering your customer somewhere, and all that. And then your processes. Okay, is there a process to do things? Do you have them documented, or things are just done anyhow? People just do anything anyhow in the business. You have to have those processes and systems. You also have to have good corporate governance. Who is in charge of what? This is the manager in charge of this. This is the management team. This is the board. This is an independent person that looks at things differently. So all these things come together to help you form a good strategy. All right, and a lot is happening right now with COVID, and we're hearing different terminologies now: digitization, networking. Some businesses are suffering, and to be able to regain, regain confidence and regain their business, they're collaborating. Okay, so I can't do this. I can't do this, but I can do this. Who do I know that can help me do what I cannot do? Let's collaborate. Let's, network, and then, scale up so that we can get more profits. And then innovation. Okay, so thinking out of the box, and then looking for different ways of doing things, especially now that consumer purchasing patterns are changing. Okay. Yeah, so I think we gotten to the end of my presentation. I'll just leave you with this quote. that says, so the person who gave the quote, James Penny, actually said that growth is never by mere chance. It is the result of forces working together. If you want to grow a business that would outlive you as the founder of the business, you have to be intentional about it. It's a lot of work. It's a lot of work, really, but it pays off. But I just wanted to add that sustainable growth, because sometimes you can achieve growth by chance. There are people who go into business, no strategy, nothing, they just enter the business and they clean out, they're making money, right? But that's just short term. So if you're looking for a long-term business that will remain, you can hand over to generations, to your children and generations after you, then you have to be deliberate. You have to be, it's not by chance. You have to, take certain steps, that would help you achieve that long-term growth. So that's the end of my presentation. I'll just tell you a bit about Gusto & Co., the company I work for. It's like Ike said, we're a research and ratings company. If you're a business that needs to get a rating, maybe you're looking to raise money from the public and people need to know what your risk is as a business, you come to us and we'll give you a rating. Also, we also do research. So when we talk about industry research, we produce industry reports on various industries, over 50 industries in Nigeria. And what we do, the value we add in that function is that we put information out in the public. One of the issues with in Nigeria is with data. You want to start a business, you want to tell if it's profitable or not. You don't have the numbers. There's nothing to show. There's nowhere you can go to read something about, the business. Even people that are involved in the business sometimes are not willing to tell you the true position of the business, right? So we get all that information together and we make them available to investors. Make them available to investors through our research function. We also have a subsidiary, Augusto Consulting. So this is the arm that deals with consulting across, if you want to form a strategy for your business, if you want to do country risk analysis, macroeconomic scenario, business strategy, even people hunting, if you want to hunt talents for your organization or around governance or compliance, we will be happy to partner with you on those. So thank you very much. And I'm open to questions at this time. Sorry for the noise.
Okay, so Ada, before we go to probably the general floor to get more questions, I don't know if we've been able to attend to Okoko's question as per how do we bypass sustainability challenges?
Okay, thanks for reminding me. So how do we bypass these challenges, and to add value? Sorry, hold on a second. Let me get the noise down. Okay. So how do we get past all these challenges that we've highlighted to add value for businesses as SMEs and other big businesses? So I think the answer really lies in our strategy. Okay, and I'm going to go back to the strategy slide. So it lies with our strategy, and for me, it's in value proposition, it's in offering value. So at the beginning of the class, when I said, look, what does success mean to you as a business? We spoke a lot about profits, making money, expanding and all that. But businesses that have been sustained over the years, right? Despite all the economic recessions, the ups and downs in the economy, and the cycles that we have experienced, are businesses that have value that are tangible. Okay. And those are the companies that stand the test of time, right? And so it's good to have a value proposition, but then it's also good for you to understand the environment that you're living in. So you don't shut out the fact that you're in Nigeria. In a Nigeria where exchange rates are weak, where inflation is high, where regulators can be funny, where some industries are, funny in some sense. You don't shut that out, but you take that understanding, and then combine it with your value, okay? And then you come up with a business or with a product that understands the customer, understands the customer's needs, and just adds value, in that sense. So my answer would be, to the external factors, the macroeconomic factors and the industry factors, I like to look at them as so it's like a family. So for instance, I have no say over the family that I'm born into, right? So whatever family you're born into, whatever you see there, you take it and you learn to live around it, right? So if you have a father who is a drunkard or a mother who is not responsible, it's your reality. You can't change it. So the conversation will be, how do I, considering the dynamics of where I operate, how do I still come up with a business, that offers value and that's profitable to me, really? So I think that's the thinking, or that's the way I would respond to that question. Thank you.
Yeah, thank you so much. When I was trying to introduce you, I tagged you Firebrand. At that point, many people wouldn't have understood what I meant by that. But I think in the past hour or thereabout, I agree, or I assume to agree that people would understand why I addressed you as Firebrand. There were a lot of people that were raising up their hands while the section was ongoing. I don't know if they can drop their questions now. I actually instructed that we drop questions on the comment section. Please, I would like your questions to be captured now that that is still with us, so that she can do justice to it. And particularly,
yes, I'm really happy to take questions.
Yeah, so we're seated and we're very much awaiting the questions to roll by. I appreciate the fact that we agree that the time we spent here is not wasted. Yeah, I can see a hand up. Please, can you just type your question? You can click on the question and answer icon to type your question, or you can drop it on the comment section so that Ada can see it also and attend to it, please. Please, if you're raising up your hand, you can actually drop the question on the comment section on the chat box. Just click on the chat icon. There's a chat icon on the screen. Just click on it and type your question, or you can also click on the Q&A icon and drop your question, please. A lot of people were asking if they'll be able to get this material. We're definitely going to send the material, both the slide and the video, to every registered email. I appreciate the fact that we acknowledge that it was of good quality for us to be requesting for it. And at this point, I want to thank you again. It was very insightful. In fact, I've always known you to be fire, but I didn't know the fire was this much hot.
Thank you.
Thank you so much.
Thank you so much. Thank you. It's I'm happy I was here. Thank you.
Yeah, thank you so much. So
well done.
Yeah, thanks. So I'm still waiting for the questions to drop. it shouldn't be a difficult thing because I've seen many hands. I saw many hands actually. Okay, I think they're dropping down. So what are the things to factor as assets in a financial statement of a business that is primarily on IG? For instance, I think you understand this scope. So
is that Instagram?
Yes, Instagram actually. Yes, Instagram.
Okay.
You know, many people have businesses online on IG, Facebook, and all of that. Probably no physical location. You understand? So I think so that's the aspects this person is referring to.
Okay. So do you want me to take the question up now?
Yes, please.
Okay. So so the way we should think of assets really are the accountants like to define them as things that you own as a business, as against liabilities as things that you owe. So things that you're owing people, while your assets are things that you own, that you're the owner of as a business. And so there are two businesses, there are two types of businesses you can look at. There are businesses that sell products and there are businesses that sell services. All right. So so for instance, the company that I work with, and I would really like to know what industry this person operates in. So maybe I can help to be more specific. So an industry like a company like Augusto & Co, where we sell services. Okay, so the assets in our company are the we call them the intellectual material. So I'm the asset of my company. All the analysts that do all those, that write the reports and do all the analysis are the assets, right? So we're a company that you consider a low asset company because the people that are there cannot be put on your financial statements. Okay, so there's no, if you look at the financial statement of a company, you won't see staff as an asset. You probably would see things like our computers, like the laptops that we use, the building that we own, if you have a building, what else would be our asset? Cash, that, cash of any sort, and things like that. So it's very, okay. Okay, so a service company usually has very low assets compared to like a manufacturing company, like say someone who makes bread, so their manufacturing plant will be an asset, their inventory, so the flour, the sugar, all those other things, that they used to make it, those are tangible assets that we have. So manufacturing companies will be heavy on assets. Okay, especially because of their plant equipment and their machinery, right? So, so David I designed fresh flower bouquets for birthdays, weddings, burials, etc. Fantastic. Okay, so just close up. So that's a fantastic business. I was thinking the other day that Nigerians, we think that we're not flowers people. Sorry, I just took down your handle. We're not people who appreciate flowers, but there are people who really like flowers. So you have a target market for those, right? So your assets will definitely be all the things that you put together to make those flowers, right? So if you have, like, I don't know how you store your flowers, but I'm thinking that maybe you buy them in bulk from somewhere and then you keep them fresh somewhere until they delivery. So those would be your assets. If you had like things you used to package them for delivery, that would be an asset. If you had vehicles like cars or delivery bikes, that you use to deliver the flowers to your customers, that would be an asset as well. If you had any sort of machinery, I don't know how these things work, but if you had any sort of machines that you use to preserve the flowers or keep them fresh, that would also be an asset. So the fact that you're on Instagram, right? I understand that. So you don't have like a building, right, where people can come and pick up the flowers. So I'm thinking that maybe you order from somewhere and you deliver somewhere. Maybe you're just connecting people I mean, that could be another way you look at it. So if you're just doing the trading part, you connect someone to someone, then your assets are very limited. But if you actually get in the flowers to a particular place, you package it by yourself, and then you deliver, then those things that I mentioned earlier would be your typical assets. David, does that help? Does my question help? Or my answer, does it help?
Hello, David. Can you indicate so that we can move on?
Awesome, thanks. Okay, thank you too. Thank you. And thank you, there's someone else, Ezekiel, for your compliments.
All right. So I think that will be all, but if not, we'll have had some more flowing. So I think the best thing to do is to thank you again. We can't stop thanking you. It was very, very insightful. Thank you for taking your time. People are still going at it fantastic. So that means I'm happy that everybody's happy, so we did not waste anybody's time. And I also know that you will be happy that people enjoyed the information you just gave out now. This just like you mentioned, that this is what would have cost us some money, to acquire somewhere. But we thank Parkway and Bank 3D, and also you and Augusto and Co Limited, for this insightful section. Thank you so much. Thank you so much. I think some other questions are coming in. So much to digest. I like that. All right. So just as a sound of notes, I know at Tuba, I get that all the time. All right.
I was responding to Toba. Okay. I get that comment all the time.
Okay, that's nice. So just like sounding out, for those that were not here when I introduced the section, I explained Parkway, the company behind a series of webinars that we've been giving out. The first one was on the 11th of September. This is the second edition. And most probably before the month runs out, we're going to have another section. But what we've been trying to do is to bring in seasoned panelists. When we say seasoned, we can see, for instance, what we mean by that. Just stay tuned to our social media handles. You can get us on IG at Parkway Projects, on YouTube at Bank 3D, Facebook also at Parkway Projects. Just follow us, stay tuned to keep you informed as per every activity that we have, especially with regards to our ongoing webinar series. I mentioned Bank 3D, and some of us will be wondering, what's Bank 3D? I also need to reiterate it for those of us also that were not available at the beginning of the section. So for a small business, what details do we need to capture for our book? Okay, and then before you take that, for some of us here that have businesses where we have sales locations, where customers working to make payments, take some stuff off our shelves and all of that. I believe that with the way businesses are today, we cannot constrain or we cannot restrict payments from our customers to just cash and their POS terminals. What I mean by that is that definitely we must allow our customers to pay via bank transfers and USSD. And we know the convenience that we experience today, especially in this space of payments, especially where it comes to the fact that our staff must confirm or validate payment for our customers before they walk off. I know the kind of inconvenience that can come with that sort of time wasting. For me, it's time wasting. I walk into a space and I make payment by bank transfer. Yes, I understand the fact that they need to confirm my payment and stuff, but then I would not want to waste that much time, for them to do that. So that is what Bank 3D as a solution, which is one of the facilitators or one of the proposers of this section, does as a value on offer. So on Bank 3D today, you you sign up, you add your sales staff as cashiers to your profile. When your customers make payments, they can confirm, they can validate these payments on their own profiles. So what it means by extension is that they don't need to call you, you don't need to keep your customers waiting. That's good offer. It's available on the web. So by web, I mean you can access it on your desktops, on your laptops. It's also available on mobile devices. So you can download from the Apple Store or from the Google Playstore. At this point, I think I'll allow that to take that question so that we don't stray so much. Hello, you can take the question now.
Yeah, can you hear me?
Yeah, I can hear you very well.
Okay, because I switched to my earpiece. Yeah, so to David's question, I was going to say that the Bank 3D app is a very useful tool when you're doing your bookkeeping, because my understanding is that it helps you track your revenue and your expenses. And those are typical items you would see in an income statement, for instance. So your income statement is part of your bookkeeping. Your income statement looks at your revenue and then your expenses, and then your revenue nets of expenses, and then gives you your profit, right? So when you have your revenue and expenses being tracked by an app, then it even helps, to be able to bring them out and spool them out, and then be able to keep the record. So I think the Bank 3D app is good in that regard. And then other things you need for your bookkeeping would be your assets. So value your business. If you have assets in your business, what is the value? And really, no matter how small the assets are, put a number to the assets, okay? How much are they worth? And then if you have liabilities, so your liabilities will be, have you borrowed money from anybody? Is there anybody you need to pay sometime soon? Record that figure as well. And then your equity is the last one. That's how much of your money have you put in the business? That's your equity. That's your shareholders fund. Okay. And then you can speak with consultants or professionals who do accounting. I mean, they're everywhere, and there are applications everywhere that you can use for your aid. Thank you, David.
Okay. Please, do you have any other question? Again, please, let's have access to the recording. Yeah, I've already mentioned that we send it to every registered email. So I think that takes care of that question. I think we have another one here. Is there a room for advisory sections? And I don't know if you have seen this.
Oh no, I didn't see that.
Yeah.
Okay, it's in the Q&A. Is there room for advisory sections? If yes, who fee won't make us break the bank? Or is that to me, or is that to Parkway?
I think it's to you.
Oh, okay. Yes, yes, definitely. That's why I put my numbers and the head of Augusto Consulting on the screen. I'm not sure if you captured it. So you can speak with us. We can work with your budget.
Okay, so I think the last part was, what are the possible payment range to have these sections? So I need to get clarity. Are you asking Augusto and Co what it will cost you in case you want to host them, or are we talking about the series of webinars that we are hosting as Parkway projects? If it's from our own side, there's no cost to it, just like it did not cost you anything to register for this. But for Ada and Augusto and Co, I think you need to DM her or send her an email to get an answer to that.
Exactly.
I don't know if we have any more questions. I was just looking at my time. We've invested, let me use the word invested like almost 2 hours, but it seems as if it's just 2 minutes. Why? Because of the quality. Thank you very much, Bank 3D, for organizing this awesome session for Mr. That. Thank you so much, Mr. David. Is there a chance to join your consulting firm as an intern?
Seriously. Please call me. Abiba, please call me. I think you have my number. Yeah. Please call.
So what it means again is that people really enjoyed the whole section. They enjoyed the delivery, the content, and everything. Okay, please, can you show the slide that has your number? People are really requesting for it.
Okay, I will, but I was just going to type. So I'll share the slide again. Let me just type. So that's my number.
Okay.
And then let me share the last point so that you can even get the email addresses. Can you see my screen?
Yeah. Yes, yes.
Okay. So the first name, Jimmy Ogobine, he's the head of Augusto Consulting, and he's the one that will do he's the one you can speak with on advisory and consulting. Yeah, that's why I put his details.
All right. So for those that are asking for the contact and details, I'm sure we can all see it very clearly. For more of this, and in fact, just make sure you follow our handles, like I mentioned. Before the end of the month, we're going to have another section, and it's going to run like a series all through the year, getting to December or even further. So just keep tuned, follow our handles on IG at Parkway Projects, on YouTube at Bank 3D, and on Facebook also. So just keep following the handles and make sure you sign up on Bank 3D today, app.bank3d.ng. And you can also download from the stores. Apple Store and Google Play Store is there. It will definitely help your business. That is why we are here. The intent is for us not just taking from the business, we also have an interest in helping your business to grow, because as a business is growing, that means you have a better potential of making sustained money. Yeah, we're talking about sustainability, not just a one-off. Am I correct?
Exactly, totally.
Exactly. So thank you so much, everybody. I appreciate that we spent this much time, and very much correct. All right, thanks so much. I appreciate this so much. We're going to be having more of this. Like I said, just keep tuned. And I thank you so much for your time. I appreciate you so much. All right, so I will sign off at this point. If there are further questions, we can channel it. Probably let me just put down some more email addresses we can push our questions to, in addition to the email address that Ada has already shown us. You can also send our questions and inquiries to, just check out the comment section right now. I'm dropping it down. So we can also take down this email address just in case we have more inquiries about, probably for those of us that missed the last section also, it was also very insightful. You can get all of that detail, from us. And but I think at this point I need to allow Ada to have her rest, and also every one of us. Thank you so much. Let's have a very wonderful weekend. Thank you. Just keep tuned there.
Thank you. Bye. Thank you.